the development of this technology is going to be cheaper and cheaper and cheaper, but we think that with the safety promise and with a partnership like ours, we can build autonomous to be a very, very big business.
You obviously have thought a lot.
Today, we're diving into Uber Technologies. Is the ride-hailing giant a solid investment in 2025? With partnerships with both NVIDIA and Waymo, Uber is a major player in several key markets. Let's break down the factors that could make Uber stock worth buying, and the risks you need to keep in mind. Stick around till the end for my final verdict. Let's get into it. First up, let's talk about Uber's strategic partnerships. The key ones we need to focus on are Waymo and NVIDIA. These partnerships are critical to Uber's autonomous driving and AI-driven initiatives. Uber has teamed up with Waymo, which is owned by Google's parent company, Alphabet. Now, Uber isn't exactly leading the autonomous vehicle race, Waymo is, but by partnering with them, Uber doesn't have to develop the tech on its own. It can leverage Waymo's cutting-edge self-driving technology while staying competitive in the race to autonomous ride-hailing. This partnership means that in places like Austin, Texas, you can get an autonomous ride through Uber's platform, powered by Waymo vehicles. And Uber's not stopping there, they're scaling this to other cities in the near future. On top of that, Uber has also teamed up with NVIDIA, a leader in AI and supercomputing. This is a game changer. NVIDIA's supercomputing infrastructure is helping Uber improve everything from route optimization to driver safety, and even creating smarter autonomous systems. It's all about making the ride-hailing and freight business more efficient and ultimately cheaper. Next, let's break down Uber's business model. Now, Uber is not just a ride-hailing service anymore, it's a multifaceted platform with several key revenue streams. First, about 44% of Uber's revenue comes from mobility. That's the classic ride-hailing business we all know. Uber uses surge pricing to make more money during high-demand hours, and they've also expanded into premium services like Uber Comfort and Uber Black, which come with higher profit margins. Then there's Uber Eats, which accounts for 33% of Uber's revenue. Uber Eats has grown massively in the last couple of years, particularly with the rise in demand for food delivery, and even grocery delivery. They've also launched Uber One, a subscription service that boosts recurring revenue. Uber Freight is another growing segment, contributing 19% of revenue. It connects truckers with shippers, and as global supply chains continue to boom, Uber stands to gain from this logistics revolution. And last but not least, Uber's advertising business is growing fast. In fact, it's one of the fastest growing segments, and it could hit $1 billion in revenue by 2025. As Uber has more users on its platform, it becomes a target-rich environment for advertisers who want to reach customers at the right time. It's a win-win for Uber and the brands they partner with. Now let's talk numbers. Uber has been through its fair share of financial struggles, but it finally turned a corner. In Q2 2023, Uber reached GAAP profitability, posting a net income of $394 million. After over 14 years of losses, Uber is finally showing that it can turn a profit. In terms of revenue growth, Uber's looking strong. Its Uber Eats and Freight segments are growing rapidly, and its advertising business is firing on all cylinders. As more people use Uber's platform across all these segments, its overall profitability is on the rise. Uber is still the dominant player in the ride-hailing market, but don't forget about the competition. Companies like Lyft, Didi, and Tesla's full self-driving are all vying for market share in the autonomous space. However, Uber's strategic move to partner with Waymo and NVIDIA rather than developing everything in-house is a smart move. It reduces risk while still positioning them for future growth. That being said, Uber still faces significant risks. Regulatory challenges around gig worker laws are ongoing and could impact Uber's operations, especially in the United States and Europe. Plus, competition from rivals could put pressure on Uber's margins. Now, let's talk about Uber's stock valuation. Right now, Uber is trading at about $78.89 per share, and here's why I think it could be worth considering for long-term investors. Uber's autonomous driving push, combined with its advertising business and freight segment, provides significant growth opportunities. The partnership with Waymo and NVIDIA offers Uber a technological edge, helping it scale its fleet of autonomous vehicles and reduce costs in the long term. However, there are risks. Regulatory challenges and competition from companies like Lyft and Tesla are real threats. The timeline for widespread autonomous vehicle adoption is also uncertain, and that could delay profitability in the self-driving space. So, is Uber stock a buy? Personally, I think Uber's strategic partnerships, strong revenue growth, and improving profitability make it an attractive investment for long-term growth. Waymo and NVIDIA give Uber the tools it needs to stay competitive in autonomous driving, and their advertising business is a great margin booster. However, be mindful of the regulatory risks and competition in the space. If you're looking to invest in a company with a diversified business model and a strong play in the future of autonomous mobility, then Uber is definitely worth considering. But, as always, make sure to do your own research before making any investment decisions. Thanks for watching, and if you found this analysis helpful, don't forget to hit that like button, subscribe, and leave a comment with your thoughts on Uber's future. See you in the next video.